Good day traders, welcome to the video. In this video we're going to break down a setup that came about using my strategy. My strategy simply applies smart money concepts with the Elliot Wave theory. Okay, so from this chart we can already see an order block, an H1 order block. So we marked it out and we watch price as it approaches. So what price does as it approaches the order block is the most important thing for us. Why? Because it will determine whether the order block will hold and whether our target will be conservative or aggressive based on the Elliott Wave theory. So now let's go to a lower time frame and do our wave count. Okay, so not to waste much time, what we see here is an impulse wave, a 5-wave impulse. Okay, right, so if it's an impulse wave, what that means is our target is going to be conservative. Why? Because we expect a corrective wave after an impulse and then another impulse going up, whether it's going to be a zigzag or a wave 3. We're not so sure. It's not our concern. Okay, so now when price enters our demand zone, ideally we put an alert so that once this price level is crossed, we get an alert for us to look at the charts. Let's go to the 1 minute time frame, and that's where we'll determine our entry point. Okay, so as mentioned earlier, we had our wave count, and so another thing we can also identify is the very last wave, minor wave, that got to the order block zone is also an impulse, right? So this is like the 5th wave of a 5th wave, right? So once we see this, we open our charts, okay, and we identify this, right? That's when we decide to put our entry. So for instance, say we got to our charts and decided to enter after this candle, this strong candle, right? So we'll put our stop loss right above, a pip or two above the high, and our conservative target, because it's an impulse wave. After an impulse wave, especially if it's a first impulse wave in a new direction, we expect either wave 2 or wave B, and those two types of wave usually retrace 50 to 61.2% of the impulse wave. So what you can do is either put your target at a support level conservatively, or you could draw your Fibonacci and place your target in this zone, right? So as you can see from from our analysis, from the setup, we would get 15%, 1:15 risk to reward ratio trade. So it's a good trade basically, and with 15% you could be done for the week or the month, if you may. but but that's up to you. All right, so incidentally, we had another setup uh, right here. So we identify an order block here. This is the last candle before the up move, before the impulse, right? And so we know that after a wave one, we expect a wave two that is deep, right? So what we have here is an order block, and we set a price alert such that when price gets here, we we determine whether we enter the trade, and two, whether our target will be conservative or aggressive. All right, so looking at how price approached the order block zone, we can clearly identify a double zigzag pattern. Right, let me go to a lower time frame to get a clearer view of what we're looking at. All right, so a zigzag pattern basically has it's got a excuse me, it's got an impulse, right, correction, impulse, and an X wave, impulse, correction, then impulse, right? And you can clearly see that the last wave, doing another confirmation of the last wave, we have an impulse here, and the very last wave, okay, not the very last, but you understand what I'm saying, we also have an impulse, right? So that confirms to us, it gives us confidence to buy. Sometimes we're wrong, sometimes we're right, but we take risks where the odds are in our favor, right? And another thing to notice is that we have a type 1 pattern here. I think I'll do a video explaining what a type 1 pattern is, but it also confirms to us to buy. We'll probably buy here. We actually buy here, excuse me, with our stop over there, right? Okay, so since we counted a corrective wave, our target is going to be very aggressive because we expect either a wave C or a wave 3, right? So we expect it to break structure based on Elliot Wave concept. So what you would do here, excuse me, so it's either you entered here with the stop there or there with the stop there. So let's just move it there. Okay, so what you do now, is either set an alarm so that when price reaches your potential target there, you then decide whether to hold or to close your trade, or you just put your take profit there. It's both. It's also fine. And we have a 1:8 risk to reward ratio, depending on the quality of your entry. Ideally, you want to enter at this candle. Oh, this is a 5-minute chart. Okay, so let's go to the 1-minute chart and see what kind of trade we could have obtained. Okay, so 1, 2, 3, 4, 5, right? So say you are a late comer or you just wanted extra confirmation, you'll enter here, right? And it's now 1:13 risk to reward ratio. So this is also quite massive, right? So the first trade was 1:15 and this one 13, adding up to 28. So you would need to lose 28 trades for you to break even if you maintain your exposure per trade. So thank you for watching. I hope you learned something, and you you got ideas for your strategy and how you're going to profit from the market. Thank you very much.